Yeah, hello everyone. You are welcome once again to this channel. And in today's video, we shall be using one of the concepts we learned in the previous video about framing directional bias. And we shall use that concept to build a profitable trading concept that we can use for the rest of our lives. All right. So I'll be guiding you through the whole process. I'll teach you my thought process, my entries, stop losses, and everything that you need to know to make this system work. So stay with me and I will open your eyes. All right, let's get started. The first thing we need to know is that this concept is liquidity based. It is a liquidity based approach in the sense that, according to what we said in the previous video, we established that your highs and lows, your swing highs and your swing lows, are liquidity points. We stated that this your swing high here is a resistance level. We had pending sell orders here and stop losses above, which makes it a very liquid point for price to take. And the same thing applies to your swing low. You have buy orders here with your stop losses below. Therefore, these 2 points are what? Liquidity levels. And remember that we were also able to establish that price runs from one liquidity level to another. So basically, we can form a system around this concept that we can trade for the rest of our lives. So now let's go deeper into what we are for today. So first of all, we need to understand the difference between a sweep and a break. Now, what is a sweep? A sweep of liquidity is when you have, for say, a candle trades below the low of a previous candle, but fails to close below the low of that candle, then rejects instantly and closes above the wick of that candle. As you have here, this is a previous candle. You're having a new candle here now. This candle trades below the low of this one, but rejects instantly with a wick, then closes above with body. So this is what? A sweep of liquidity. But for a break of structure, you have a body close below the low of the previous candle. Now here I've been able to say that a sweep signifies what? A reversal, meaning that anytime you have a rejection like this around this liquidity level, it means what? Price is about to reverse. But a close of a candle body below the low of this candle represents what? A continuation. So as simple as this statement is, this is going to be what? The bedrock of the concept we are going to be studying today. Now let us continue. Got to take everything off first. All right, so if we go to the chart, look at what we have around here. If we have a low of this candle like this, and then this next candle trades into it, look at the way we reject instantly. So this is what is a sweep of liquidity. But if you look at this one right here, see the way we have a low around here, but this candle came, closed below it instantly without a rejection. So this simply means what? A break of structure. The psychology behind this is that sellers in this case are stronger than buyers and therefore wants to take price further down for the time being. The same way, in this case, this sweep and rejection tells you that buyers have now taken over power from sellers and are intending to take price higher. So this is basically what we are going to be building the system around. Okay, now let's get into how we get our entries and our position sizing. The first thing we need to know about this is that if we have a previous swing high like this, price comes around here and then takes out this high, the next thing we want to see is what? A sweep. We do not want to see price close, so we do not want to see price close above this level, but what we want to see a sweep. Now let me point out that this thing we're about to say now is applicable across all time frames. I remember the first funding I got, I did the same thing basically on the 1 minute time frame, and that was what got me funded over time. But for the sake of this video, and of course for better accuracy, we are going to stick to an intermediate time frame. Let's say the 4 hours time frame. Alright, because this is suitable for both swing and intraday position. And of course, the higher the time frame, the better. So what we are going to be doing is, when we get to our chart, we want to open the 4 hours chart. We spot out our basic liquidity levels, which are your swing highs and lows. Now when price comes to around this level, we want to see that the candle that trades into this level reject instantly with wick and closes below this line here. So if we get this rejection, like I stated earlier, this is a signal that price is about to reverse. So we are going to be taking a sell from here instantly with our stop loss right above the wick of this candle, and we'll be targeting this low. In the same way, for a buy scenario, if we have something like this, price comes around this low, we do not want to see price close as a break. The moment we have a break, it means that price is intending to go lower. But what we want to see is what? A sweep. One price to sweep and close above the low of this candle. And the moment we have this, we are going to enter instantly, and our target will be this high. As simple as that. So pay attention as we go over the chart, and I'll show you several examples, and everything will be clear to you. Now I'm currently on USD JPY, and this is the 4 hours chart as stated. Look at what is currently happening here. We had this swing low here, right? Price traded into it, and instantly we rejected. What am I going to do? This tells me already that, okay, from this level, buyers have taken over power from sellers. Therefore, I'll go long immediately after the close of this candle. My entry will be right here, stop loss right below this wick, and I'll target either the nearest liquidity level, or I go for 3 RR. As simple as that. You can see how this is currently running. Now, one trick you need to understand is that when you have a very long wick like this, sometimes price tends to what? To trade back again to retest this level. When the wick is so long like this, price sometimes tends to come back to retest the same level before it keeps going. So what you can do sometimes is, because you want to reduce your stop loss, you can simply wait around here again to see if price comes back. So with this, you have reduced your stop loss and your risk to reward is higher. But the downside to this is that you might end up missing out on the trade. So if you are the type that doesn't like missing out on the trade, the best thing for you to do is, immediately this candle closes, take your entry from here, stop loss right below the candle, and then you target 3 RR or the nearest liquidity level, which is this high. Alright, let's continue. Look around this level again. What are you having? This is a swing low, and that's a swing high. Look how this candle traded into this level and rejects immediately with a wick. Now this again signals what? A reversal. So instantly we are going to take our entry from here, stop loss below that low with a little buffer to accommodate for spread and all that. Our take profit will be above the high, and this is how we would have caught a beautiful 5.8 RL trade from here. Look around here once again. Look at this level. This is what? This is a swing low, and that's a swing high. So price traded into this level, it gives us a rejection instantly above that level. So what we are going to do is, we basically take out our entry from here, stop loss right below that low with a little buffer for spread, like I stated. Your take profit is around the nearest liquidity level. That is what? A 12.8 RL trade. When you come around this level again, what can you see? We took out this low. Instantly, see how we rejected with a wick. This again has signals to us that, okay, price is about to reverse because buyers have taken over power from sellers around this zone. Now look at what I told you about long week the last time. See how long this week is. If I wanted to take my trade aggressively, I could have entered from here, then stop loss right below this low. But you see how price traded back to almost retest this level, right? So this of course would have given us a better risk to reward. So if we enter from here, this will be our first take profit, of course, 3.6. Then overall take profit will be that swing high. So this is a beautiful 7.8 RR trade. The same concept keeps going on and on and on and on. Now if you look around here, what can you see here? Once again, we took out this swing low, we rejected instantly. What are we going to do? Entry from here, stop loss right below, and we are going to target the opposing side liquidity. That's a 13 RR trade. Look around here, the same concept. You have this swing low here, a liquidity level. Look at how price came, took it out, and instantly it rejected, then closed above. We take our trade from the close of this candle. Of course, this is going to be a very long stop loss level because of how this candle closed, but we don't mind. We have to be mechanical, so we take our trade. This is our take profit level, and this continues on and on and on and on. Look around here once again. Okay, from what I told us about sweep and break, this guy right here is a simple example of what a break of structure. Can you see how this simple thing here has helped us to avoid this stop loss? Because look at your swing low here. Trying to be mechanical around here will help you to avoid losses. All right, so the next way we could have been able to take a trade from around here was this bullish engulfing, because of course we have been able to identify our swing point, a swing low and a swing high. Price traded into it, but then closed slightly below it. So there was no trade for us here yet, until when? After the close of this candle, where we had an engulfing. So we could have taken the trade from here, our stop loss below, and then we target the swing high. Alright, the same concept continues over and over and over again. Look at this level again. This is a liquidity level. We traded into it, rejected, and closed above. Therefore, we take our trade from here. Stop loss right below it. We are targeting the next liquidity level. So we have several liquidity levels here. This is 1, 2, and 3. So at this level we already have 1:4 RR. At this level we already having 6 RR. So you can be trailing your stop losses along, or you take partials when after the first TP is hit, you take some partials. After this level is hit, take partials, then you hold the rest until the final target is hit. This is how you trade. Then you continue. Look around this level once again. What can you see? We took out that swing high, closed below instantly. Now this is a sell example for us. So we take our entry from here, our sell order, stop loss right above, give some buffer for spread, then you hold. Of course, this is your first take profit. Then anywhere else, it's fine. Of course, you are going to make losses. This right here is a losing trade. Okay, one thing I love to point out is that to avoid losses like this, what you need to do is avoid a rejection with what? Doji candles. Because the psychology behind this candle is that it is an indecision candle. none of the market participants is in control here. All right, so the sellers are not in control, the buyers are not in control. So the best thing to do in this scenario is to first of all stay out and see what happens next. So we can see how if we would have entered from here, we would have hit stop loss, but then price came back again, took out the low of that indecision candle, then gave us a confirmation. So this would have been the perfect time to enter. So take note of that. Anytime you see an indecision candle like this, stay out of the market and wait until you have an engulfing as a confirmation for you to take a trade. So this is how you would have taken your trade, stop loss right below it, and then you target the opposite side liquidity. All right, so let's look at another pair to compare what we have, so that we don't think that this is specific to one asset or something. So we are currently on USD/JPY. Let's try USD/CHF and see what we have. Okay. Coming, I'm trying to find some examples for you guys. All right, if you look around here, what can you see? It was a swing high. Price took out that high, closed below instantly. As a matter of fact, this is a double confirmation, because we had a sweep, a rejection, and of course an engulfing. Therefore, our entry will be here, stop loss right above the high, and then we target this swing low. That's a 4-hour trade. Look around here again. We took out this high, rejected, okay. If we enter from here, this would have been a lost trade. Of course, you will lose trades. So price took us out first, then moved in the direction. Okay, that's fine. That's like one loss after several wins. That's fine. Now let me show you something here on the daily time frame. This whole sell move we're having on USD/CHF, look at what happened. We took out this swing high, rejected instantly, and look at how it would have been on this trade till now. Stop loss above, and our take profits right here. This is how it would have been on this trade till now. Now going back to the 4 hours time frame, what can you see? Look around here. See how we took out this low. Do not forget that this candle is not the one that swept this low. It just touched and returned. This is where we had a sweep. So we would have taken our trade from here. Our stop loss will be right below here, and then this targeting up here. So this would have been a break-even trade. Again, break-even. Now look at this. We swept. Let me make it proper. We swept this low, rejected instantly. This would have been our entry. Stop loss right below it. And we are targeting the opposite side liquidity. This TP1, TP2, and our final TP. Oh yeah. So yeah, guys, this is how you trade this concept. It's as simple as that. So I'll be waiting for you in the comment section to take your questions. Let me know if you have any confusion, or if there is anything else you want me to make videos about. Alright, do not forget to like the video, subscribe to the channel, and leave your comments. So thank you, and bye for now.